Good morning, everybody. My name's Neil Redding. I'm an account director at Fornet, and welcome to our 8th Consumer Duty update. So just to let everybody know on the call, you are muted, so you can hear us, but we can't hear you. So as we go through the webinar, if you do have any questions, you can post any questions in the chat down below at the bottom of the screen, and we will try and respond to you post-event as quickly as possible. At the end of the event, we will also put up an email address. So if you don't post any questions during the webinar, feel free to post them afterwards. Many of you have probably also seen the supporting white paper for this event. So you may have read through that and got a bit of an idea on what we're covering today. But the main panelists today will be Kevin Still and Luke Cuthbertson, as you can see on your screen. This will be a 45-minute webinar, and there will be an offer at the end of the webinar for everybody that stays with us to the end. So before I hand over to Kevin, I'm just going to give you a very high-level overview, one slide, positioning Fornet. We're conscious that some of the people joining this event today have never worked with Fornet, so it just gives you an idea on who we are and what we do. So without further ado, Fornet specialises in digital transformation, secure infrastructure, cyber security and customer experience. For the last 20 years, we've successfully delivered the services that you can see in the center of the triangle there, what we call our workplace services. So that's unified communications, contact center, and all the applications that sit around the contact center to support the agent and deliver efficiencies. Over the last 7 or 8 years, we've made some strategic acquisitions, and that's enabled us to deliver the other two services you can see in the triangle. So secure networking and connectivity and our consulting services. And the consulting service is really where we lead a lot of our conversations with clients. We're not led by technology, it's outcome based. We are vendor agnostic, and we've got quite a large portfolio of vendors and services. And we've built up the highest accreditation with all the vendors we work with, but also some of the key certifications you'd expect from an organization delivering these types of services, some of which you can see at the bottom of your screen. And finally, we deal with both public and private sector clients, and we work with some of the most secure and mission critical organisations in the UK, including the likes of the Bank of England, National Savings and Investments and the Prime Minister's Office. So that's all I'm going to do in terms of positioning. What I will do, I'll hand you over to Kevin now, who's going to talk to you about the latest updates within Consumer Duty, and what that means to you and what considerations you should have. So over to you, Kevin.
Thanks very much. I'm doing a double act today with Luke, so hopefully I've got Luke in the driving position on my slides at the moment. So the first thing I'm really going to do, rather than just go back through the whole history of Consumer Duty, look at what effectively was an end-of-term report by the FCA through Sheldon Mills on the 31st of July, where they held a webinar, effectively giving an overview of where they felt the market was at across all financial service sectors, some who've done better than others. Quite an abstract report with regard to his story around taking the leap, frogs and lily ponds timed at the same point as the Paris Olympics and the water quality in the Seine. So some of it you had to have a fairly open mind with what they were looking at, but nonetheless it was still reinforcing many of the messages, which is they've seen meaningful improvements, some better than others in different sectors, but there's been consistently warnings throughout the period between July 2023 and 24, particularly around some of the sectors that they've taken some deep dives. Motor finance is probably one of the ones that's front of mind, along with general insurance, and they've identified areas where they have done deep dives and some of the outcomes. Some of that particularly around the area of fair value assessments, and that firms are still struggling to get their heads around that in certain sectors, in particular those where there may be free to consumer services. So we're going to talk a little bit around that. Luke's got a number of good use cases today that we'll look at that. I touch upon a number of these areas, and one of the ones at the bottom that is particularly close to my heart is around consumer understanding and evidencing that. And that's particularly relevant when we look at vulnerable customers and things like quality assurance frameworks. But in amongst all of this, Sheldon does talk about the role of AI, creating opportunities as a force for good. But equally well, there are a lot of measures around how you put the appropriate risk management frameworks in place. So a lot of pleasure pain type messages. If you can just move me on, Luke. And one of the areas I'm going to focus on is we've got some new rules coming into play on the 4th of November that are very relevant to the vast majority of financial services firms. And that relates to the transition effectively from temporary measures when we had COVID into permanent measures around forbearance, borrowers in financial difficulty in consumer credit and the mortgage market. And on the right there, I've just flagged some of the reports from the likes of the Credit Services Association that are talking about inconsistency, where many of the people we're talking about today have multiple creditors and they want to see some consistency in how they're treated. And that could be anything from a local authority, a government agency, to FCA regulated firms. So I've put links in throughout this that complement also the white paper we've put together. But I want to start on one of the areas here that is quite a big impact, and that we use the terms potentially vulnerable, vulnerable, and particularly vulnerable fairly loosely. And some of these are less defined than others, and that's particularly true here, where in most books that I see, about 4 to 5%, maybe up 6%, would be tagged as particularly vulnerable, where they're at heightened risk of poor outcomes, of detriment, and they need to really be handled very carefully. And some of the changes that take place out of this policy statement, PS 24.2, from the 4th of November, effectively puts a big cross through this in particularly vulnerable, if you wouldn't mind just moving me forward. Now, what this does effectively is increase the spectrum of risk very, very significantly. So if you're thinking about financial lives, the FCA reports, they took it upwards of 51%, may have characteristics of vulnerability. So that spectrum is a very significant one relative to what you may have regarded as those that require some tailored forbearance or even referral strategies with specialist providers or your own specialist support units. Now, this is also aligned with some of the work from the report from December last year by the FCA around the credit information market study, in particular separating financial vulnerability from non-financial vulnerability. So I've just showcased here a very recent case study with the Vulnerability Registration Service partnering with TransUnion to look at how you can actually bring this data together and in real time then deliver that into contact center self-serve environments so that you can actually build effective strategies for people with various types of vulnerability. And I don't propose to go through all of those today, but Luke is going to look at some of those that we've showcased, how that can work, particularly where you're looking at things like real-time speech analytics or embedding data searches within sort of conversational environments to actually enhance those customer journeys. But we're seeing here that this then affects a number of source books. I picked on one that's likely to be very relevant to the majority of creditors, lending, where we're seeing again that cross through, particularly in relation to things like credit worthiness assessments, making relevant some of the checks that said, am I doing both a financial vulnerability assessment, but also a non-financial vulnerability assessment? And this then relates to some of the areas which is, say, not very well defined in the rule book at the moment around things like mental capacity issues and other areas where we're increasingly getting into things like English not first language, low literacy and low numeracy. But just above that, I flagged also Conc 7, which relates to arrears management. And this is really where we see some of the more acute problems, where you do have people in financial difficulty, often with multiple creditors. And the rule book and the guidance has been significantly enhanced around making sure that you've got documented policies around when you do an affordability assessment with using tools like the Standard Financial Statement, how you make that affordability assessment available to the consumer to share with other creditors, and how you explain that debt with with the consumer in terms of its impact on their credit file. And some of these things aren't trivial. And again, time's clicking, and we're getting very close to the 4th of November. So again, I've provided the links to the policy statement and other documents around here where we've put various thought pieces out around some of these specific topics. If you can just move me forward. Now that then relates to a lot of industry work that's been going on across the public and private sector, and people like Chris Fitch have worked very hard on putting different drills together. The key, though, is operationalizing these off the back of your policy. And I see too often excellent vulnerability policies, but they struggle to be embedded. And what we tried to do today is highlight some of that when we go into Luke's first demonstration in the second. But I'm also highlighting on the left there are new drills emerging all the time that are being referenced within the Dear CEO letters. We're seeing a frightening level of rise in terms of use of illegal money lending, often where people are no longer being accepted for credit, potentially where they've got things like a gambling habit or something similar, which is actually a stimulant for them borrowing more. And an area that is growing significantly, with most of the banks now signing up to the economic abuse toolkit, this rise in economic abuse, but also its alignment with your financial crime policies. So vulnerability and financial crime are often two sides of the same coin, and in different organizations, potentially public sector, the initial thought may be that this is financial crime or fraud rather than somebody being coerced. So lots of areas here. I've flagged some of the usual drills like the Texas drill that will be very familiar to many, but we're now looking at many others where 4Net have worked with people like the Alzheimer's Society and being dementia friendly, where you would use different drills. So without further ado, I'm going to move on next. I think we move on here into your demo, Luke.
We are straight into the video. Thanks for that, Kevin. So, Bill, I'll just ask our host to flick us over to the video. But before we play it, I'm just going to give a brief explanation about what you're going to see on the screen, essentially. So the idea of this is obviously just echoing the title of the event, really, and how technology has been used in some organisations. And just to explain what's going to play, it's about a 3-minute video. And the left-hand side, I guess it's a bit of a placeholder. If you imagine kind of an agent system in a contact center and the ability to present information to them. But the really interesting bit for me is on the right-hand side. And I'll point out a few of the key kind of characteristics, if you will. So under the compliance heading, where those pink boxes are, these are the compliance elements of an interaction within a debt collection environment that essentially act as reminders for the agent as they go through the interaction, and it will tick them off with a couple of seconds delay with it being actually spoken on the call, so they're not having to kind of remember everything themselves. And it'll also change as the conversation develops, so it's contextually relevant to what's happening at that point in time. On the right-hand side, that's small text, but it says events. This is where suggestions, so not necessarily something that has to happen during the interaction, but suggestions of useful information that might be linked to a knowledge base. It might be linked to an external website, as we actually see in this demo. But again, just making the agent's life a little bit easier, meaning they can focus on the conversation and not have to be worrying about kind of, I guess, digging out information that's relevant to that customer. And then at the bottom, and there's a couple of the bits here I'll highlight. That one's a customer vulnerability risk rating. So that's configurable for the clients and obviously changes by the environment, but ultimately acts as a visual reminder. And then importantly as well, I just want to highlight the bit that says summary. So there's a still after the video that I'll bring back up. But we had one piece of feedback actually during the pre-event survey that was about how I guess technology like this is financed, and this for me is really key. So what we're seeing in our customers is a significant saving in wrap time of kind of 50% plus, that is ultimately providing the business case to support implementing technology like this. So without further ado, I'll stop talking there and allow us to kind of just watch this video.
Perfect. Thanks for completing security. The reason for my call today is because I'm not too sure if you're aware, but your loan account is in arrears. It's behind by 2 months. The arrears balance currently stands at £315.65.
Yeah, but I've been meaning to ring you. I've been really struggling financially at the moment. I was made redundant 2 months back, and I found it a real challenge to find a job. The stress is mounted up and buried me in the sand a little. I'm sorry. I've been so low thinking about this, and my anxiety has been through the roof. I mean, I'm a single parent as well, so I'm just concentrating on looking after my daughter. She's 7.
Of course, no, bless you. Please don't apologise. Firstly, thank you so much for sharing that information with you. And I'm so sorry to hear that you're going through a difficult time. These things happen, and it's my job to ensure that we try our best to support you whilst you get yourself back on your feet.
Oh, thanks, I really appreciate it.
Not a problem. Firstly, because you mentioned you're going through a difficult time financially, I have a number for PayPlan, who are a free charity to help support people going through financial difficulty. They've been brilliant with customers I've spoken to before, help manage their finances, reprioritize repayments. How does that sound?
Yeah, that'd be brilliant. I didn't even know you could do that. Thanks.
Yeah, no problem. Well, I can text the number through to you now on the mobile number we have. Is that okay?
Yeah, perfect.
Absolutely. I also have a number for Mind, who are a mental health charity that supports people going through stressful and challenging periods of their life. Would you like me to text that through to you now?
Yeah, that'd be great.
No problem. I'll get that through. How is the job search going?
It's been a long process, but yeah, I had a call yesterday actually. Been offered a new job.
That's amazing news. Congratulations.
Yeah, honestly, huge weight off my shoulders. In fact, I should be able to start making the payments again, to be honest.
Absolutely. Well, look, what we want to be able to do today is run through an affordability calculator to help you best understand your financial situation. And then we can discuss setting up an affordable and realistic repayment plan with you, to tackle that arrears balance. How does that sound?
Yeah, that's fine. I can run that through now if you want.
Yeah, excellent. That'd be brilliant. I do just need to make you aware that any arrears balance can impact your credit file. But once you're in a repayment plan, this will show positively on your credit report to show that you're working with us as best you can.
Cool. So thank you for playing that for me, Bill. So if you want to just flip back to the slides. So hopefully that helps kind of, I guess, bring to life a little bit about the technology that we're talking about today. And I guess importantly as well, it does, just to pick up on the point I was mentioning at the start, the idea of this, I think often one of the problems people have had in implementing technology like this is the cost. And it being specifically focused at larger contact centres, but ultimately now this is available and provides a useful business case, or a viable business case, I should say, through the inclusion of things like the generative AI summary at the bottom, but also, I guess, to the point that Kevin was making as well, is it gives you that visibility over all of your interactions rather than a small sample size that maybe not truly representative of the customer experiences that you're providing. So just to give you a specific example of where this has been deployed, and I think is particularly interesting when we talk things about like vulnerabilities, was it 4, 5, 6% up to potentially 51, 52%, with that kind of strike through of the particularly. There was a customer of ours that was a pensions provider, and ultimately what they were looking to do was understand vulnerabilities across their estate. They have obviously manual checks for it, but I'm sure everyone here knows that when you're in a contact center and you're ultimately dealing with the inquiry, you might not pick up on those more subtle indicators of vulnerabilities, and you certainly won't do so consistently. And in effect, what this organisation found were that they were previously manually logging about 2%. And ultimately implementing a system to do that consistently across the population identified 19%, which is a significant uplift. And this was obviously before any changes that come in November. I think one of the other things that was key for this particular organisation was increasing the volume of customer feedback. So it was a post-call survey that was promoted by the agent population. And not only did they increase the survey volume significantly by obviously encouraging it and monitoring it consistently, they also increased their CSAT results as well. So I do have another kind of case study that I come to a little bit later that talks about how this technology is used for not just, I guess, counting and classifying, but also being able to root cause the drivers as well. So at this point, I'm going to hand back to Kevin just for the next update.
Thanks for that, Luke. So I think the context of this, and I think probably is going to be useful from the illustration we've just had, that many individuals are not just suffering with one provider, they've got multiple relationships. So what the UK regulatory network have identified both June last year, but more recently in March this year, aligned with a letter from the FCA that came out the same day, was, you know, this is a large scale challenge. Again, we're referencing here the financial lives data, but you need to be doing more to support proactively people that you can identify as being in financial difficulty, financially vulnerable, and that early intervention is probably the right thing to do. And as I said, we mentioned earlier on the July 31st reports. That is an interesting area because prior to that period, the FCA was sending out a lot of requests around vulnerability, consumer support, then with follow-up questions to firms, and then requests for their board report. And many firms concerned that some of the MI that's in that is not deep enough in relation to different cohorts of customers, notably those with characteristics of vulnerability. So a lot of this is really, again, pointing to what are you doing? How do you evidence that you are monitoring consumer outcomes? And how are you proactively using things like income optimization, not at the arrears point, but also at the point of onboarding? So we did see a Dear CEO letter to the credit unions, high cost credit, and other consumer lenders in March this year, which was not only talking about irresponsible lending, but it was also talking about what do you do proactively in the event of when you say no, are the treatment paths you can take people down that may be non-borrowing approaches, but you don't just cut somebody off and leave them dangling where there is a risk that they could go to an illegal money lender or something similar. And so a lot of this is moving towards this journey of tell me once. And as I say, the United UK regulatory network covers Ofcom, Ofwat, Ofgem, as well as the FCA, so essential service providers where we have things like priority service registers. So this approach around tell me once is becoming increasingly important, leading to this deadline on the 4th of November. Again, I've provided the link to the joint letter, which goes into more detail about the expectation of the different regulators in moving forward. And so this is then focusing on really the dark side. So if we look at nudge being positive, sludge being negative, how we embed some of this at scale in some of our operations. And the FCA as an outcome-based, principle-based regulator won't tell you in the rules what's good, what's bad, but they'll illustrate that. And one of the examples in the podcast reference here is, whilst they won't tell you what a good wait time is, the general view is if you're super fast on the front end, but your back office is very slow, then that's likely to be regarded as sludge. They're looking at equivalent investment in both the front office and the back office the whole way through the product life cycle. And product assurance frameworks are really important to look at that as to where the weak, clunky bits are in the whole journey. And that's then looking at things like positive friction, as well as where friction's intended to deliver poor outcomes. So things like buy now, pay later under a lot of scrutiny in terms of, is it too quick? Are you not introducing bits that said, right, actually this is too quick, and people may well end up with buyer's remorse at the end of this process. If you can just flip me on, please, Luke. And this then, what you're beginning to see is in a lot of the material they produce, notably the Dear CEO letters, is they're starting to highlight where they're seeing concerns in customer support. And the customer support RFI that closed in June started making reference not just to telephony, but email responses, SMS responses, but now into AI and chatbots, and looking at consistency across all the channels and what are good response times, what is your commitment, your charter to your customers, and then picking up on some of the points below, which included, are your vulnerable customers getting as good an outcome as your core client portfolio? And there's still a general sense, I'm sure, that Luke will come on to, that many projects at the moment, big programs, are more about cost saving than they are about improving customers' journeys. And consumers can see through that quite quickly when they're seeing facilities that they may have had before being cut down. Most obvious area when people look at branches, but also diversion strategies where contact centres are under-resourced. So if you can just move me forward, please, Luke. So we just come into now the next use case. Just to put this into context, Abby Thomas, who's the CEO of the Financial Ombudsman Service, which will be the ombudsman for the vast majority of people on this call, has just highlighted the main types of complaints, credit cards being the top, motor finance, and that area, not surprisingly, in the top 5, but alarmingly a 70% increase over the last year, quarter on quarter, which suggests we're going in the wrong direction. And that's before some of the duty type complaints around consumer support, consumer understanding, badly designed products begin to come to the fore, and that we start finding professional representatives starting to look at some of these areas of being of interest with regard to challenging behaviour. And so just hand over now back to Luke in talking about how Fournet have looked at addressing some of this, again at scale, with regard to this area, which is regarded as a key duty metric.
Yeah, and thanks again, Kevin. I guess just before I jump into it, I want to kind of echo that point that you were making there around, I guess the improvement program, should we call them improvement programs, loosely just looking at that single aspect of cost, and I think that's often a problem that we see, in that it's not considering the entire end-to-end customer journey. And equally, if you were to try and measure that, it's bloody difficult and expensive to do at scale through manual means, and that's where things like, again, we're talking a lot about the speech analytics technology today, but there's another example here of how an insurance claims company has used the technology to be able to understand complaints. So again, we're starting in a similar position in terms of identification, so against a manually logged system. So I know that you can walk into any contact center and ask somebody how they would define a complaint, and they will have different responses. I think one of the key bits here is having consistency on it, and consistency at different levels as well. So again, for this particular company, it was kind of 4 times the volume were identified when you did it through an automated means. I think to build on just that idea of identification, though, it's important then to consider what you're doing differently and how you can impact the customer either in the moment or through a change in process for the future. And for this particular insurance company, so what they did was they used the same technology to really drill down and understand not from a small sample or just a manual kind of audit of some of the complaints, but across their entire estate, what was driving the issue. And in this particular instance, the number that stood out was it's 46% of them related to procedural delays. And I know from kind of working on it, it was with no proactive update going to the customer either. So there was a real issue there that they could ultimately understand that what it was costing them to service customers who were complaining about it, and do something differently about it. So once they've understood it at scale, they were able to then prompt it back into the agent and the front line. And one of the examples that was, I guess, developed through that as well was the idea of missed callback promises. So this particular organisation had an issue where they were promising them and not logging them in the system. Well, as you've seen in the demo already, we're able to prompt alerts and links through. So when the callback was heard, you can click the link, go through to the relevant part of the system, and set it to make sure it's not actually missed. So we're not just taking corrective action once the problem's happened, we're trying to prevent it happening in the first place. And back over to you, Kevin.
Thanks, Luke. So the paper that many of you will have received yesterday and is available after this goes into AI and AI governance a lot more detail in terms of some of the lessons learned. But I think one of the things I wanted to identify in this is that this needs to be part of quite a holistic view from a governance point of view and a policy point of view. So you thought through how you're going to deploy AI within your business operations, and this, features quite strongly where it's geared purely as an OPEX type opportunity, to the extent that I put in a quote and the link below, where it feels like we're regressing before we go forward. And that a lot of the areas, the promises around, this is super secure, we can pick up sentiment analytics, we can build more data, driven decisions into this. All of those things, we're beginning to see more and more good case studies. The flip side is, for those that saw the report around McDonald's withdrawing AI-driven technology on their ordering facility, you can see what happens when it goes horribly wrong. If you can just move me forward, Luke. And so a big part really of the duty, which is where, 4Net would put a lot of store, is around scenario testing. You're not doing this at a very limited scope level. You've got to be able to evidence here the product design was right. So on point 2 below, it's taken account of your risk appetite and your target audience. Now, with regard to things like financial inclusion and financial exclusion, if you were limiting around particularly vulnerable at 4% of your book, that's a different proposition. If you turn around and said the spectrum of risk is, it could well be 50% that have characteristics of vulnerability. And how have you built that into your product design so that those people get equivalent outcomes to the rest of the audience? So some of this scenario testing, as I say, is fundamental to the duty, but it needs to be evidenced. And I think that's my concern. Many firms were struggling because it's the first time the FCA have asked for duty board reports, and is the MI sufficient for purpose? And can we back that up with regard to how was AI embedded, even if it was the use of Gen AI to start off with or other tools in the first instance? Have we backed that up by policies so that agents, frontline staff have bought into it as well? If you can just move me forward, Luke. So these data strategies, outcome testing, very important. So I'm just going to touch on another policy rule that comes in next year, affects firms in different ways. This is PS 24.3, which is better known as product sales data, or PSD. And the really important thing around this is big data. The FCA are asking firms to provide a copy of their back book and then quarterly performance data on different outcomes at a credit agreement level. So this isn't aggregated data, it's every single account. So big banks get hit first, and then proportionately there are different delivery cycles through 2025, and firms impacted would have had a letter from the FCA during the course of June. So again, you're under no misapprehension this is coming, and that you need this data and the MI and QA frameworks to back it up, because they can see, if you didn't do an affordability assessment or a vulnerability assessment when onboarded, that 6 months down the line, it went into arrears and then into a debt remedy, for example. So there's a lot of, pressure in this area here where you have got a data-driven regulator who's got better data than you may have yourselves. So a lot of this is key in planning that if you haven't already done it. But key within this is segmenting consumers, particularly vulnerable customers, and some of their behaviors, which can be key. And that behavioral science is becoming increasingly critical in what we're looking at. So if you can just move me forward. Final bit and final segue from me really is some of these key performance indicators we focus on are generally at your firm level, but it also affects your supply chain. And what you're seeing more and more, even last week with the FCA talking about supervision by principal firms of their appointed representatives, but this should apply irrespective to distribution channels and supply chains. How do you provide this level of supervision on the end-to-end customer journey that may involve BPO firms or specialist providers? So Luke, I'm going to hand back to you, I think, for your final case study. I think you're on mute.
I've Thought I'd dodge the whole webinar without doing that, but anyway, as Kevin was saying, that was the this will be the final case study, and we have a raft more in the background as well. If anybody has any particular issues that they would like to kind of discuss with me and see if they've been solved elsewhere. But I was kind of picking up on the point that Kevin was making around kind of testing at scale and ensuring compliance across your supply chain. So for me, that was there's a particular case on the screen here that's around BPO, and this was a BPO assessing their contacts, but also providing it as a service back to their clients as well, so they could ensure a decent coverage, and in this case, 100% of all their interactions being analysed. So if we kind of look old world, what they were doing was they're manually kind of strapping us on a set of headphones, marking the 4 or 5 calls per agent per month and giving an assessment. Now that's clearly not sufficient. Statistically doesn't stand up to any kind of scrutiny really. And what the idea here was adopting a kind of enterprise speech analytics solution that automatically assessed 100% of the calls, and it covered 84% of the criteria that they were doing manually as well. So obviously a huge tick in the box for being able to evidence that you're testing at scale. I think one of the other benefits that people don't often think about really when they with this kind of tech is the reduction in the manual efforts as well. So there'll always be those things where you want a human to make a judgment on whether something was right or wrong. But what you're able to do is move away from the kind of needle in a haystack type approach of hoping you get the right interaction to assess, to actually using this technology to point the human and their judgment to the right part of the interaction or across multiple interactions as well. And ultimately what we saw in this environment as well was an increase in compliance. So when you've got that direct feedback, and in here it was the feedback was going directly to the person it was about, and it was happening on all of their calls. So it wasn't wait 2-4 weeks for somebody to have a coaching session with you. It was every single day I'm being told how I'm performing, and I see the areas where I'm doing well and the areas where I'm potentially not as well. So you can see the jump from the 84% to the 92% within just 3 months of the deployment there. So that's for me a really good example. As I say, appreciate actually it's quite a large contact center, and some of the questions we had in advance of the session today were around the smaller contact centers, but we see the same results there as well. Some, if anyone wants to talk about how this might work in a smaller environment, Neil's about to kind of flash up my contact details as well, and I'm happy to have that chat. So at which point I will hand back to Neil just to close out with our offer.
Thanks, Luke. Thanks, Kevin. Yep, so as we said at the start of the webinar, we do have an offer for everybody that's joined us today. So if you, if I'll skip on to the next slide. So the offer is a 2-hour free of charge on-site workshop. So Luke will come in, he'll carry out an assessment of your QA processes and form, build a high-level business case and implementation design, looking at all the benefits of the solutions and services you've seen today and how that maps to consumer duty with a return on investment model. If any of the organisations here today have published an annual report, we'll also bring in a personalised report which maps out how these services and technology can help you meet your strategy. So that's the offer. Just to close the event, I have seen some messages coming in on the chat, so if we haven't already responded, we'll do that as soon as we can after this event. If you haven't asked any questions, please feel free to drop an email out to Luke. His email address is on the screen. Within the next 24 to 48 hours, we will share this video with all the relevant links you've seen. There'll be a link in there, Calendly link, where you can book your workshop with Luke. So that's it from us today. Thank you very much for everybody for joining, and hopefully we look forward to seeing you in the workshop. Thanks, everybody.
Thanks all.
Bye-bye.